Thanks for your company for the weekly this Friday, the 19th of February. I'm Jessica Amir, a market analyst with Bell Direct. Well, the Aussie share market hit a new yearly high for the fourth week in a row. And it's this momentum and Monday to Thursday's lift of 1.2% that erased last week's drop, the red candle to the right, and moved the market further above its 15-day average in pink and monthly average in orange. Simply, this tells us from a technical perspective, the market is likely to rally up. What's key here? Better than expected economic news is supporting this rally. Australia's unemployment rate again fell, dropping from 6.6% in December to 6.4% in Jan. Now, that jobless rate was lower than forecast, good news, and takes the rate to a 9-month low. Plus, 91% of pandemic deferred loans are now being repaid, meaning Aussies are in better shape and Australia's recovery is intensifying. Looking at how different parts of the stock market performed this week, mining stocks, materials, rose the most, with Australia's biggest miners, BHP, Rio Tinto and Fortescue Metals, reporting stronger than expected financial results and record high dividends. As for standout stocks, though, this week, EML Payments, EML's the ticker, they rose the most, up 26% to $5.14 on reporting record revenue, stronger than expected earnings and a bolstered outlook after winning 70 new contracts. EML sells payment cards used by businesses like Sportsbet, the Star City Casino and the Queensland Government. And EML was then upgraded by 4 stockbrokers with targets from $5.41. Macquarie, the most bullish, $5.70 target. And aerial imaging company Nearmap NEA, another standout, up 21% to $2.62 on reporting stronger than expected results. Nearmap's net loss improved more than forecast and revenue charged as success in North America bolstered sentiment. And it's also worth noting that this week's share price surge was enough to recover from last week's short sell attack. Several brokers then jumped on and upgraded Nearmap, with most targeting $3.10. So it's worth watching EML and NEA shares. Both are trading in new technical breakouts and are showing earnings momentum. And for next week, aside from the vaccine rollout on Monday, 3 areas will be in focus. Firstly, reporting season. Secondly, company stocks benefiting from the rising Aussie dollar. And thirdly, the oil price. Touching on reporting season, most results have beat expectations so far, and there's been more companies upgrading earnings than downgradings. Of the 112 companies that have reported, over 60% beat expectations. Aside from mining companies punching above their weight, the underdogs of 2020 have been shining this year. Insurance, telcos and diversified financials reported the biggest earnings per share growth of 11%, 8% and 6% respectively. On the flip side, the stay-at-home economy sectors, tech and gaming, have seen some of the biggest EPS declines of 3% and 2%. So with that in mind, next week I'd be eyeing insurance companies NIB, NHF is their ticker code, reporting Monday, Medibank MPL on Wednesday, $5 billion miner alumina AWC on Tuesday, and the company that developed Siri, Appen APX on Wednesday, and the tech giants Afterpay, APT and Zip Z1P reporting on Thursday, with APT expected to announce its first ever profit of $11.8 million in the half year. The second area of focus next week, what the rising Aussie dollar means for investors. Now, the RBA wants a lower AUD because it makes Aussie exports cheaper. What's really interesting here is the RBA Assistant Governor said this week that if the RBA hadn't been buying bonds since November, the Aussie dollar would have been much higher. Now, despite this and the RBA's efforts, the Aussie dollar has actually gained 10% against the greenback in that time. Now, there's talk that the Aussie dollar could rise from 77 US to 85 US cents. So importers will continue to benefit from this. So maybe look at companies already doing well from this scenario like Accent AX1, Baby Bunting BBN, Babcorp BAP, Beacon Lighting BLX, Lovisa LOV and Michael Hill MHJ. And the final area to consider next week, the energy sector. The oil price has rallied to a new 13-month high this week, and its price is now up a massive 260% from April 2020's low. Great for oil stocks, rebounding from last year's low, But investors are thinking, will this oil price slick cause inflation? Higher prices tend to slow down an economy because consumers aren't able to buy as much, businesses' costs increase. Perhaps this is why US stocks pull back this week, with investors topping up bonds and Bitcoin to hedge. The second consideration with oil, the world's largest producers announced that they're scaling back production and investing in renewables. Royal Dutch Shell plans to be net zero emissions, reduce oil production, and invest in carbon capture technology by 2030. While BP is looking to cut oil and gas production by 40% over the same time. So although oil is likely to move north as freezing US weather fuels demand, a cleaner economy will be the focus in years to come, and that's worth a thought. From all of us here at Bell Direct, thanks for your company this week. I'm Jessica Amir. We'll see you on Monday.